they have sold those 140 million ounces over and over and over and over and over and over, thinking no one ever stands for delivery. But now all of a sudden, everyone's standing for delivery. What could possibly go wrong? And at the same time, you have the largest player in the market flipping from short to long. And that's why this cycle
That's
is
why
different. It's not financial; it's geopolitical.
there's more.
Um,
Yeah. And
yes,
the fact that it's everybody's realizing it's for big tech or for high tech and military.
this is a bigger deal altogether, and it is, and it's about the realization that the physical metal is more important and worth more than the
That's what's
currency
happening.
behind it. But
And
no one ever stood for delivery on these exchanges. That's what's breaking the whole system.
well, and years ago, I had conversations with people talking about so more futurists talking about how silver was going to completely change because they've come out with ways to coat silver because because it's very conducive, but it corrodes. But they have new ways of dealing with silver so it no longer corrodes in a it will eventually, but in the lifespan of the equipment that they're using it won't corrode. So now suddenly it's a game changer in how silver is used and needed in military and high-tech equipment because it doesn't corrode and it's significantly better than other metals for conductivity. So suddenly we're dealing it's a whole nother ball game.
Yeah, and it's needed everywhere. It's needed in military equipment, high-tech military equipment. It's needed in water purification and medical uses up the yin yang. It's used in solar panels, which are
Everywhere.
increasing. It's used in anything that's digital, electronic or electric. In a digital world, it's needed. And I
Because
think
it's the
that's the
most conducive.
realization.
Yeah, it's the most conducive material. Graphene is, but graphene's a different deal. That's actually the most.
Nothing conducts heat or light on the planet better than silver. Nothing.
Yeah,
And
there.
so that's why it's used. I mean, like in high-tech military components, it's needed because the heat is such that everything else kind of,
That's right.
whittles away.
Yeah.
But silver is a far better conductor of heat and light than just about anything, but only in small amounts, right? So it's called inelastic. You need just a little bit for a bigger product that costs much more. They don't care what it costs, they need it. And that's why you're seeing all this metal leave the
It's better
ecosystem.
than
Like
gold. Right. I mean, because gold is used because it wasn't corrosive to say, but now that it's bypassed, now it doesn't have those corrosive issues, and it's way better than gold.
yeah, and gold has been agreed upon by the world as a monetary instrument, and you're seeing it largely being reintegrated into the system in the global south, and you're seeing huge gold deliveries into this country every month. Both gold and silver are the whole narrative is flipping with them, and the
Yes, it
big
is.
money
Yeah.
does it, sees it, and is taking advantage of accumulating it and standing for delivery, while the public hasn't caught on yet. Your
Well,
listeners have, but the public hasn't.
yeah, well, you've been talking about it since 2019 that there's somebody bringing in all this stuff. And it seems like they've been planning. You said the most sophisticated buyers know something is going on. So they've been building this up, building it up, holding the prices down, building it up. And now it's like, okay, we got a shitload in our in our
If
reserves.
you were
Let's
worth
let
$5
everybody
billion,
steal.
Sarah, if you were worth $5 billion, do you think that you would know the rich and famous or the powerful people? You would. You don't get that kind of money without being at the highest level of the game.
That's right.
And when you're at the highest level, you know the insiders, and the insiders are telling their cohorts this is what's going to happen. So slowly, using the suppression of rhetoric and of price all these years to cover what they were doing. And you wake up one day and be like, wow, what happened to the price of silver? How the hell did that go? And why are all these deliveries happening? What about the delivery delays in London, which are 8 weeks? It's supposed to be one day, T plus one, you get your silver. Now it's T plus 8 weeks because the Bank of England says we have a shortage of manpower and trucks and such demand. Really? So the Bank of England doesn't have enough trucks to move my silver. That's a problem. I have to wait eight
It's
weeks
really happening.
they're getting their delivery failures. They're running into their bluff being called by countries and sovereign wealth funds that were never coordinated or motivated to take on the West, never wealthy enough to do so. But when you get, central banks and sovereign wealth funds on the back of central banks, you're dealing that are now very wealthy. These countries were third world 20 years ago, but now all of a sudden they're wealthy, motivated, coordinated, sophisticated, see exactly what we're doing and say, ha, you want to hold down the paper price? Great. We're going to stand for delivery because these contracts give us the reason or the ability to do so, even though nobody ever did. we're gonna. And that's what's changing the game. It's the huge deliveries that has rewritten the rules. And when you have a system based on trust where no one stands for delivery, that's Bernie Madoff. You kill it.
Yes.
But when everyone says, Bernie, I need my money, Bernie, where's my money? Bernie, where is my money? 8 weeks. What do you mean, Bernie? Well, Bernie's dead, was in jail. The point of it is that it's the same thing. Bernie is the LBMA, and
Well, Bernie
Bernie
used to be
is
the head of the NASDAQ. I mean, he was
that's right.
really, really respected.
Well, and
And
so was the LBMA.
bad
The
money.
LBMA is a 140-year-old exchange, the oldest on the planet. Really, and you could argue the same thing is true with many of our institutions that used to be really respected, and that's why no one wants our treasuries anymore. The judicial system, the political system, the immigration system, the massive fiscal irresponsibility. In the 6 weeks we were closed as a country, the government, they added 600 billion in debt. You can't even make that up. We're doing $1 trillion every 100 days. So all of these questions, including using the Treasury bill or the bond market and the currency and the SWIFT system as a weapon, all of the things that we have done, all of the missteps backed by nothing but trust from an insolvent nation who has trampled on the moral high ground that we really stood on after World War II, that we were the beacon of freedom and justice in the world. A lot of people look at this country and say, what the hell happened there? You know what? I think I'd rather own gold instead of treasuries. And then you look at the gold market has doubled the performance of the 10-year treasury for 25 years. Last year, the treasury was up 4.5% and gold was up 45. This year, the treasury is up almost 4 and gold is up 60. Silver's up 100. So it's the measuring stick that we are measuring against that is wrong. But the world looks at the dollar and our institutions, both political and judicial, and the moral high ground that has been trampled upon by us, where we can, invade Iraq mistakenly, not find the weapons we think are there, destroy their country, and we're still there 22 years later, and say that's the country that's imposing rules upon a country like Russia, judge, jury, and executioner. And I'm not passing any judgment on the war, just simply saying it's not for us to do this stuff. And that's why we're seeing no one want to buy our treasuries anymore. And that's why you're seeing that
Actions have consequences.
yes, they do, and that's why you see the Genius Act that will be into effect no later than January 1st, 2027, or maybe even sooner if the regulators hurry up. But that's why it's synthetic demand for the treasury market, and because and then you throw in the Japanese yen carry trade it's going upside down, and you're seeing all of these treasuries that have been owned by the Japanese pension funds that are all being sold, which will push rates up even more. This is a system that's I think, just beginning to show the cracks. You got fiscal irresponsibility, massive debt accumulation, and the demand for our currency and our debt fades. And then you get central banks step in, which is to monetize the debt, which erodes confidence. The only winners in that game are real assets, and that's what survive. And that's what gold and silver and all commodities represent. It's not to get wealthy, it is wealth that will survive a system of paper promises that starts to unwind.
So, what do you think is going to happen in 2026?
Uh, I think you will see problems with the banks that are over leveraged and yep, and undercapitalized. They're, as you and I were talking about off air, and those are the regional banks. Those are the U.S. banks in the state of Minnesota, like U.S. Bank.
The
These are the
70% of commercial real estate, which is ready to be the loans need to be reset,
yeah,
owned by small and mid-sized banks.
right. The regional banks like U.S. Bank in the state of Minnesota, which isn't a commercial bank, it'd be a large regional bank. But these banks are the ones that are on the hook for this, and it's the unwinding not just of the commercial real estate. It's mortgage-backed securities in general, which also contain residential real estate. As unemployment continues to go higher, it's great to have a 3% mortgage until you lose your job, and then what happens? And one thing that they could really do to ease the burden would be to allow mortgages to travel. And if they did that, it would be a very big step, but they haven't done that. And so if you are locked in at a low rate, great. But what happens if you have to move for whatever reason? The real estate market is in trouble. Commercial real estate market is in very big trouble, very big trouble. And you're right. And the systemic nature of these banks failing, it creates a very, very big problem. To me, that would be the big problem in 2026. And
Underemployment, because people don't have money. It's really
well, that's it. And it's only going to get worse. And then you bring in AI, which kneecaps entry level jobs and a lot of good white collar jobs. My son, who works for me now, was an accountant at Price Waterhouse getting paid 80 grand to analyze a balance sheet of a real estate investment trust. AI can do that in 1 second without having to pay $80,000 to a kid out of college. And you and I were talking about your upcoming travels. When you go to the Minneapolis airport, look around. There's one cashier when you check out, when you come out, if you park your car there. Everything else is automated using your credit card. You go into every single gate. Minneapolis, I think, has one of the nicest airports in the country. Every single gate has a restaurant, just about, but those restaurants are there's iPads that you order from, and a food runner and a bartender and a cook, instead of waiters and waitresses and busboys. And there's three people running each one of these. You go to the McDonald's in the airport, it's a giant kiosk. You don't order from people anymore. You push your stuff in, and there's two, three people there. So you're beginning to see not only big corporations who will shed high-paying jobs in the name of efficiency, which is what AI and robotics will do, but it will come at the expense of massive, massive job cuts. And it's not just blue collar or entry level. It will go all the way up into high-paying white collar jobs as well.
yeah.
I think it's a very big deal. And so as that happens, this is why you see the Federal Reserve now pivoting, getting rid of quantitative tightening, as they said they would do, which would be selling all of these assets off their balance sheet, which again will reignite the inflation spigot on top of lowering rates. And the rumor is that they're going to start buying $40 billion a month again of treasuries to suppress rates, because no one wants our treasuries. But this is in order to ease the burden of an employment market that is starting to crater. And I don't know how much it will really work, but they figure if the cost of running a business gets much, much higher, then they will come at the expense of employees. Well, if they lower rates again, which got us in this problem to begin with, um, it will address the inflation problem. I mean, the unemployment problem. But when you mess with Mother Nature by suppressing interest rates, there is a price to pay, and that is you create distortions in asset prices and misallocations of resource and capital. What I mean by that is, what's your house worth at 3% versus 9% on a mortgage? A hell of a lot more. And resource and capital. If you're a company thinking of why they're laying people off, if you think interest rates will stay next to nothing forever, sure, let's expand. Let's build another wing. Let's buy that other company. Let's add a division. Let's hire 40 more people. And then all of a sudden rates go way up and the cost goes way higher and your business goes way lower. What do? So
But the
you're
Fed is
screwed.
the Fed's in a corner. They can't raise rates anymore. They cannot do what they traditionally have done. They've already, I mean, this is what's quietly.
But right, what happens if you don't? If you don't, that means that you end up incentivizing more debt and destroying the value of the currency, because
They're in a corner.
that's right. They're damned if they do, they're damned if they don't. And that is why the most important thing to take away from all of these videos we do is, whether you buy gold or silver from Miles Franklin, I hope you do. But if you don't, buy assets. You need to own assets right now, period.
That's